What's up, everybody? This is DCTV. I'm your host, the Data Lord, and this is Crypto and Coffee, where we talk about crypto while we drink coffee. It's our morning news show where we help everyone understand the markets for the day, the news for the day, and get started with our Crypto Nation community here. So, hope everyone is feeling great. Happy Wednesday. Yesterday was Pi Day 3.14. So if you didn't celebrate that yesterday, go ahead and get yourself a slice of pie from your local bakery. And, let's celebrate math a little bit, hey? So I want to say what's up, everybody. Good morning, Indo. I see you. And Boston, what's up, brother? Good morning. And wapa, we got Jaime. What's up, boy?
Good morning, everyone.
Look alive.
Hump day.
Yeah.
Let's go.
Let's go. And I'm assuming if Boston is showing, just Bossy's just behind. So what's up,
Good
Just?
morning, Boss Don, and just Bossy. Welcome.
Wow. So I feel well rested. I was looking for SBF in the desert. I have some videos I'll share a little bit later. I think I found him, but more like traces of where he was. So we'll keep you posted on that. But looking at Bitcoin, what the frick is Bitcoin doing right now? Everyone's kind of wondering that because out of nowhere we had this huge green day. Like, let's look at that. Yeah, it's kind of exciting actually. Looking at the whole market, we see like our space is kind of thinking about trying to recover, right? Like we certainly kind of hit a bottom of bottoms in the last 60 days, and the market's flirting with these support levels we had. So it's not to say that we're necessarily out of a bear market by the general global market cap goes, but Bitcoin itself is certainly seeing a rally. We look over here, Bitcoin, even though it shows red here, that doesn't really mean red, does it?
No, it's healthy. Actually, what's happening?
It's so healthy. So Jaime, if you would,
but of course. So, my dear Bitcoin, this is remember I missed it by $59. I'm not bitter. There's always another opportunity that comes in.
At least it wasn't by $69. Ouch.
Yeah, that'd be a double.
Nice. That would suck. That would double suck. Yeah.
So here's what's happening. This ascending channel we had before, where Bitcoin went from bottom to top, and then back to the bottom, top, and then broke down the below. And look how beautiful this 50. And we're on the daily, by the way. We're zoomed in at this moment. So this is the day traders' initial sight is usually this screen, not the swing trader or the long-term or high time frame trader. I'm more of a high time frame. I don't day trade. I don't have the time. I got twins and I got 99 problems. I don't need one more. So here, you can see it broke down. It tapped it as support, and with the meltdowns of all these banks, all of a sudden it missed me by $59, ran right back up, and look, it's beautiful what it did. It went right up to almost the top of that channel, closed yesterday just below the previous high close, and now we're hitting the median of that channel, which used to be support, then resistance. Now it's resistance again. Just like I had stated, I think it was on last Friday, with this tail down, this is a doji, dragonfly doji. Well, this is almost the inverted. When you see so much strength going up, or in the case it was coming down and it's being bought back up, it's usually a bullish thing. In the case, because it bounced off the 200 daily moving average, it had support and a bullish sign. Well, at this moment, we crossed above the 50, and now we have a heavy sell, and it closed below here, and now it's holding at this point. It's more likely to come down. It would be healthier if it comes down to test the 50 daily moving average, and then that confirms that support, and we should see another leg up soon. If it breaks below, guys, Now, here's where we need to watch. If it breaks below and it confirms the 50 moving average as resistance, in other words, it stays below here, then we could clearly see another bounce off of the 200 daily, 200 daily moving average, or a breakdown. So we're watching it case by case. This is the point where either you enter a short or just wait for confirmation to the risk to reward ratio, meaning for this amount of profit, if you were to short it, it's about 6%, 7% gains. So that's on the traders themselves. But I'm a swing trader, so now I'm about to zoom out. So let's zoom out. And this is what I'm watching for the week. The week. We broke through the 50 moving average on the weekly, exceeded the 200. This level, guys, is extremely important for us to close above. For me to confirm, now we have a bullish trend up. We should, or at least a good foundation by the end of this week, meaning Sunday at 6 p.m. Eastern, we should close above this 200 moving average. And then we test as support. If we close below it, listen to this. If we close below it, that is not a bullish sign. That would mean there is a retracement. So far, it's good, though. This run up is good. We had a dragonfly doji on the weekly, which is bullish. Look at how similar. You have this dragonfly, and then we have a pump up. If we zoom back in on the daily, and I zoom in much closer, it looks like this bad boy right here. We have a dragonfly doji and a pump up, which got faded. But then look at the next candle. We had two nice fat green dildos. So
Pickles.
or pickles, sorry. Yeah.
They're more like pickles. I mean, there's the
not as bitter though.
I mean, it's bright green. It's a pickle.
Yeah, it is. So this may be the opportunity for Bitcoin to break through. We'll see. By the end of this week, we would know if we close just below it, we may have that breakthrough on the next one and repeat what happened on the daily. Of course, you should always wait for confirmation. If we zoom even further out, this is what we're looking at. Let me remove all these lines. This is what we're looking at on the monthly. We are above the 50 moving average, which is sitting at around 23,800. If we manage to close above the 50, and now this is the end of March, so about 2 weeks from now. If we close above this line, that's really good, guys, because now the next resistance point, of course, is the one that's coming across here at about 28,900, which I showed you on Monday. And the next really important one after that one sits at around 33,500. So far, it seems Bitcoin is taking a breather, which is healthy. It's not bad. It's healthy. But by the end of this week, we should know what direction we would continue moving. Do we test it as resistance and come back down on the weekly? Or do we cross up and now, oops, that was weird. There you go.
No one wants to hear that when he's driving.
Yeah. So the healthy thing is let Bitcoin come back and confirm this as support, which is sitting at around 23,150. So if we stay above 23,150 in the next couple of days, by the end of the week, I think we're good. That means we refueled the rocket and we should have it more to keep going up. If we break below, that's when we have to watch out now on what happens next. Do we continue down or what do we do? So that's where we're at, where Bitcoin just had a nice little run up. Now it should refuel. The rocket did good. Now just watch for the confirmation or breakdown, and we'll take it from there at that point.
Word. Hi, May. Thank you for that. Hopefully nobody gets wrecked here. I really be smart about your trades.
Yeah, don't go long.
Yeah.
Don't go long at resistance, guys. That's my only advice. I said it last time. We had the breakdown. I had to buy too low. So now we're looking for that next buy level. I think in my case, I'd wait for that confirmation on the 50 moving average. If it sits and confirms, then I'd be looking for a smaller long. I won't go as heavy as I would have down there at the that I missed by $59. So
Yeah.
stay cool. Back to you at the studio, Brandon.
Yeah. Back to your mama's house. So what's up, everyone? I wanted to say before we get into the stories for the day, good morning, Indo. What's up, boy? What's up,
Good morning.
Boston? What's up? What's up, Just Bossy? I see you. I
Good
see you.
morning, Just Bossy.
And Lexa with the boner
Good,
candles. I like that.
good
I like
morning,
that
Lex.
about you. Yeah. So appreciate everyone who's here on the stream today. And let's get into the news. So sure, this is said. So in what Jaime just said, Bitcoin comes close to hitting 25K, and here's why. Okay. Bitcoin saw a significant climb, nearly hitting $25,000 on Bitstamp exchange earlier today. The flagship cryptocurrency is currently trading at 24,000 and change. Both Bitcoin and Ether saw a surge of approximately 20%. That's a nice trade if you swung that. So if you locked any of those profits in, green is green, baby.
Yes.
Since their lows on Friday. This sudden rise came after reassuring promises from the U.S. authorities that deposits at failed Silicon Valley and signature banks would be protected, leading many crypto-related companies to rally together with major cryptocurrencies. The Treble USDC stablecoin also rallied following a boost in lenders' access to quick cash, which was authorized by the Federal Reserve and Treasury after the government cheese takeover of Silicon Valley Bank and Signature. Regulators moved to provide FDIC insurance to Silicon Valley Bank depositors who were uninsured, with some critics calling this a bailout. And it was. That's
It
a
was.
bailout.
It really
If you're too big to fail and the government scoops you and it's like, nah, we got you, boy. How is that not a bailout? Tell me, how is that not a bailout? Like, that's in its exact architecture a bailout. Did someone bail you out? Well, yeah, it is a bailout. Like, crap.
Yeah, and guys, that's an important thing. And they did just say we will back you up to the FDIC limit. They actually said the whole fucking value of the account. And mind you, we're not asking, because Silicon Valley Bank is an important institution in terms of businesses and everyone else. But the market should take care of itself. The challenge with taking care of itself or self-regulate is when the Fed and others start fucking with it. And that's what triggered it. It almost seemed like Silicon Valley was targeted by others for this failure, because that was the last one. They realized how bad it was with these interest rate hikes, and boom, now all of a sudden they're like, okay, we support you, you're good. All your signature's dead though. Silicon Valley is okay.
But it's like, listen to this. If you're gonna bail them out, then how come you don't bail out the coffee shop down the street? How come you don't? Right? You're playing favorites, and like, this isn't a matter of the U.S. economy. This isn't a matter of like, sovereign security. This is literally just the government playing good old boys club. And so Bitcoin was specifically created to prevent that from happening. This happened in 2008 on a big scale with auto manufacturers in the US and huge banks and mortgage companies. Like, it was nuts, and that crap can't keep happening. But let's keep reading here. However, the Biden administration denies that any taxpayer funds will be used. How does the government make money? How does the government make money? It taxes people. There's no other input for the United States government to make money besides we tax people. So it might not come directly from taxpayers on paper because they wash the money around in government accounts, but it came from taxpayers. Rest assured, the government is not a business. So despite depositors who are also taxpayers indirectly funding the FDIC through levies on their bank deposits, the collapse of Silicon Valley, Silvergate, and Signature banks is expected by traders to result in a significant slowdown of rate hikes by the Fed.
Yep.
This is reflected in the terminal Fed funds rate, which has dropped from 5.7% on Thursday to 5.1% due to the bets being placed by traders. According to Bloomberg's Fed swaps, no more rate hikes are now considered the most likely scenario, with 50 basis points of rate cuts priced in by the end of the year. So that's why Bitcoin pumped. People were basically like, yo, the government's doing some whack crap again. You better lock your money in crypto so that we don't have the government wail on us. And here's what's cool about this. Here's what's cool about this for crypto heads. This just established that if there really is fear, uncertainty, and doubt on the US currency or any other sovereign currency, people put their money in crypto, specifically Bitcoin. That's what this just showed us. People believe Bitcoin is actually a hedge against governments pulling some funny money business. How cool is that? That is what Bitcoin is, though. People have eyes to see this now. So you should, knowing that, being a crypto head, have more confidence in Bitcoin. Keep your DCA going. Whenever you do see Bitcoin's price scoop down a bit, get yourself another bag. Like keep growing your Satoshi position, because if this is happening now, and we know every major government in the world is doing some nonsense with their money and is likely to at some point pull some of the same stunts, like, you should have your money largely in a place where you're controlling it, not relying on some third party to, we promise there's not going to be any accidents here. We're not going to hurt you. We're going to treat you right. Come over here and eat a ice cream sundae with me, Daddy. Like that's kind of how the government talks about stuff. So anyways, Jaime brought this up, this tweet here. So moving to a full reserve dollar digital currency is our best hope to insulate the internet financial system from the systematic risks embedded in the fractional reserve banking system. This by Jeremy Allaire. Jaime mentioned that we were exactly talking about this, earlier this week. So,
Yes.
this article, interesting.
Yes, and the challenge here is the fact that all they're doing is moving it to the crypto space.
Mm-hmm.
So they're moving the dollar precisely into it. USDC is from Circle, and a few months ago they got approval, which we saw the effect of it today, or over the weekend, that the Fed can actually issue and back up these tokens. It's almost like a prelude to central bank digital coin. So imagine the dollar bills now, where Indo, I'm with you. And that's why we're waiting for the confirmation on the floors. If it breaks down to 50, okay, now watch the 200. If it crosses the 200, you'd be spot on, Indo. So that's why we look for confirmation before we go in on any of these bets. And like I said last week, I removed my 19,500 and moved it down to 18,250 to 18,500 as the next floor for us to test. This time I won't be so greedy. But continuing with this concept, why is it a risk? Is because Bitcoin and all the cryptos outside of Bitcoin are still tied. This weekend was one of the first signals where banks fail and Bitcoin took off. Almost underlying, and it's funny because this pump occurred right after you and I spoke, Brandon, on the stream, where we said that over the weekend they were saying, guys, Bitcoin was created for precisely these meltdowns. And sure enough, boom, it just took off immediately afterwards. Not going directly with what Mr. Dante Disparte said, but it's still a risk, because if you have that global financial meltdown, Argentina just hit 100% inflation. Bitcoin has only dropped 66% from its top. Imagine a country's fiat going
How
below that.
heartbreaking is that?
So that's where this article is going, is if the inflation or depreciation affects it so bad, you will see a lot of problems rushing towards crypto. And that's why you're seeing adoption in Argentina, in Zimbabwe and other countries, Venezuela, of Bitcoin versus their local fiat. And this is what that risk is, Dante is speaking of. And the fact that USDC, now imagine the fact that if a lot of people or the government would love to be able to track every single dollar, well, once they go CBDC, meaning now they digitalize, now they can do precisely that, and they can actually yank it. They're running
Yeah.
experiments in China where they even put expiration date on their renminbi, on the yuan. So if you don't spend it within a certain amount of time, it expires. Can you believe
Use
that?
it or lose it. You can't even have a store of value.
Yeah,
How whack is that? Yeah.
yeah.
Downvote, max bidding, right? So thanks for that commentary there, Jaime. This is seriously a big deal, though. Let's read this article here. Banks are bringing systemic risks to crypto, says Circle Disparte. Disparte. Arrgh. That's kind of a spicy name. Let's read this. Dante Disparte, the chief strategy officer and head of global policy at Circle Internet Financial, discussed the systemic risks that the traditional banking system poses to cryptocurrency industry in an interview for the upcoming Word on the Block episode. Circle is the issuer of USDC, the second largest stablecoin by market capitalization. Disparte highlighted the issue faced by crypto companies due to the lack of confidence in banks, noting that the shutdown of Silicon Valley Bank and Signature Bank, two major lenders to the crypto industry, demonstrates the risk that traditional financial institutions pose to the crypto ecosystem. The bank failures in the United States have demonstrated that banks themselves are introducing risk to crypto assets versus the inherent direction of travel of risk that a lot of regulators were concerned about, is that crypto would introduce risks to banking, said Disparte. USDC is a dollar-backed stablecoin, meaning it maintains a stable value equivalent to the United States dollar, which is about as equivalent and stable as my hands after I drink 43 cups of coffee. It currently holds a market capitalization of 39.5 billion, making it the fifth largest cryptocurrency. USDC broke its dollar peg with something inappropriate that I'm not going to say because it's a sex joke over the weekend after it was revealed that Circle held 3.3 billion in reserve deposits at SVB. USDC fell to as low as 87 cents before regaining its dollar parity on Monday, according to market cap data. According to Disparte, the USDC reserves are made up of strictly cash and short-dated treasuries, with 80% held in the latter, and there is no safer asset class. The challenge is that full faith and the credit of underlying banking system on which that relied had nascent risk in it that started manifesting itself. So codependence. However, Disparte said he believes that the crypto industry and banks have deep codependencies, and both can rise together. That's probably true. Banks are funding companies that are building crypto, but just because it's crypto does not mean it's decentralized. And I want people to have the ears to see, or the ears to hear the difference, right? We talk about this all the time, but just because banks are funding crypto does not mean banks are funding decentralization. That doesn't mean they're not, though. And so we just need to be clear that we aren't putting our money into things that are centralized when we're under the impression that crypto equals decentralized. Okay. As many financial institutions are already leveraging blockchain infrastructure for payments and are interested in digital asset custodian solutions. Disparte said that Circle has attracted more banks into the crypto sector than most digital asset firms. BNY Mellon is one of Circle's major custodians, and the company partners with BlackRock. I always have to say that slow, otherwise you kind of run it together and say BlackRock. Like it's not a croc. It is a croc actually, but to manage the Circle reserve funds. It's not traditional finance versus decentralized finance. It's not crypto versus traditional banks. Maybe. It's actually a solid wall of shore up markets, shore up confidence, protecting consumers and ensuring, again, that the outcomes in the long run prove that the stress test could have been weathered by both traditional finance firms and companies like Circle. Disparte said that Circle is prepared to meet redemption demands, but acknowledged that the need for minting new USDC to provide a digital form of dollars that investors can hold to protect themselves from economic risk. All these risks start to accrue to urgency from legislators, which we're definitely seeing, policymakers, and regulators to begin to protect consumers at the comprehensive whole of the government level, as opposed to relying on this patchwork approach that we have in the United States for regulating the industry. So there's a lot to kind of talk about here. Specifically, I don't know about this last statement here. That basically the government needs to protect people from screwing themselves over. I think you should do your own research. I think there's probably an element of centralized systems. Yeah.
It is 100% centralized. USDC is a centralized USDT. All stable tokens are centralized, except for DAI, I think.
Yeah.
That one's
Decentralized is a DAO.
it's a DAO. But the rest of them, USDC, USDT, BUSD, all of them are centralized. What does that mean? It can be frozen. Even if it's in your wallet, it can be frozen. It can be yanked out of your wallet. Yes, decentralized would not allow that. So it's a systemic risk, not because of crypto. No, they're trying to convert their fiat into a crypto with all the benefits of crypto, of immutability and all that other stuff, but it's still centralized. So it is not really a store of value, honestly. Just as because what happened was even Coinbase and a few others, when Silicon Valley Bank, Signature, and a few of these failed and they shut down Silverbank, Silver, whatever, we just read up there. They had USDC at that institution. So imagine if it goes down, now all those tokens, because it's centralized, go down with that bank. So that's where the inherent systemic risk is entering. It's because we're trying to use fiat as if it were crypto, but no, it's a system of control and risk at the same time. So I think they have it backwards. They're trying to use that excuse, and clearly there was an attack against these crypto banks. I mean, if you look at it, they were targeted because they were crypto friendly. And a lot of the legislators, if you look at what they're saying, it's almost like a sniper shot. Why did these specifically die in the last week and then really killed over the weekend? And then the feds are like, oh shit, we're going to back it all up. Everyone's okay. But they're dead already. They removed the boards. 2 of them went bankrupt. Shit. I think it's strategic. It's a strategic.
It feels that way.
Move to regulate and shove regulation in instead of working with the industry to build good regulatory framework that protects the investors, protects the consumers, and protects the users and protects the developers like a mature industry would.
Yeah. And 20 Mining says MakerDAO will go, 100x next bull. They're doing cool work. I mean, decentralized autonomous organizations, that's what a DAO is basically a smart contract business vehicle. So they set it and forget it. It is what it is, right?
And Wyoming is supporting it. The Catawba Nation CDEZ is supporting it at the DAOs. So it's real, guys.
It's going to be a legit thing. And this thing I have brought up on the screen here, I want to talk about this. This is there's a lot of things that set the platform for Bitcoin to come on top of. They're called proto Bitcoin. Proto meaning before, the current form existed. And there was an Austrian economist named Ludwig von Mises, and he talked about a lot of things Bitcoin is now the embodiment of. And so I wanted to touch on this because this is honestly a foundational element of a lot of the things we're seeing and doing. And there's people who've already done this song and dance. Like I know it's easy to look at like, this is technological. Yeah, the blockchain part is, but the whole money economics part, that is not new. That's old. And there's a lot of wisdom we can glean from people who've already been down this road before. So there's money in the broader sense, right? And then there's money substitutes. And whenever we talk about an abstraction of value, that's what a money substitute is. And then there's money in the narrow sense. So like the majority of people experience money in this way. There's commodity money, there's credit money, credit cards, and there's fiat money, actual cash. And so the majority of normal people use money only in those senses. We don't really use money outside of our debit card, our credit card, and maybe hard cash, right? And so in money substitutes, though, there is token money, which we're now seeing tokens exist in crypto. But before that, people didn't really mess with tokens. Like it wasn't really a thing. It was this concept that was abstracted and only really used by fiduciaries, right? Like a bank or like a financial institution,
or even casinos.
And casinos do that, absolutely, because that's frankly what a chip on a table is, right? It's a token. It's not you're only able to use a token inside of a specific environment. It doesn't exist outside of that environment. But in that environment, it has utility, and yeah, typically you can cash out that utility, right? And then there's like deposits and banknotes, right? And then there's certificates. And so certificates, that's basically what our fiat has turned into. It's just turned into a certificate you can't really use for anything outside of people being able to trade them generally, right? And so I want us to elevate our thinking a little bit beyond just Bitcoin and look at how money works in its architecture, and look at how brilliant Bitcoin is, because it's able to fulfill a lot of these categories, right? And Ethereum came up, and now we have tokens on top of that too, with all the predecessors of Ethereum. So we live in exciting times because now this is available to all people. It's not just for fiduciaries, right? But yeah, I want everyone to think about money in a more sophisticated way, and not just look at how can we get rich, right?
Yeah.
So
And I think the important basis you brought, not yet, not yet. The important basis you brought, hey Gundy, good morning, sir, is Bitcoin didn't come out of thin air. It's the evolution of these bases, these principles that were laid out eons ago, like the Medici's with banking, and just then paper money versus the gold, and even gold. How the money of Rome, you could have gold coins, and then they kept taking all the gold content out and replacing it with lesser metals, and that's what depreciation, inflation, triggering all that shit. So we're seeing the exact same thing repeated constantly. And the problem is that we only have a lifespan of a useful lifespan of about 70 years. The rest of it is kind of like, oh, hopefully I don't turn too bad. But imagine people don't have that memory, long-term memory, that the dollar is going to go away, guys. At some point, the basis of the dollar will go away. It was the francs at one, pesetas in the other. It's like the
marks.
British pound, the marks. We've went through these stages in the past, or these dominant or base tokens or money. So Bitcoin is the result of payment system, store of value, a lot of these concepts finally being engineered by a team led by Satoshi Nakamoto. Who knows if it was a single or a team working together with Hal Finney, but they got this going. And it was the best engineered, hardest asset engineered by mankind. It's like people don't realize how revolutionary it is. Where now I don't need a third party. I don't need a trusted, because banks are trusted. And yet look at these failures occurring. You're losing. Businesses can't get their money to pay even though they earned it. They put their hard-earned money into the bank. They disappear. So that's the challenge. That's the beauty of Bitcoin. And the whole debate is, will it become the next currency? That remains to be said. Right now, it's treated as a commodity, like gold. So it is traded as such, and people keep it as a store of value. don't know. It can, but we'll see what the future holds for it. But as a store of value, man, it's the hardest asset you could
Yeah.
ever own, and it's
There,
transportable.
precisely. There are stores of value and means of exchange, right? And so the idea of means of exchange means uh, it used to be like I had to take my seashells and maybe some of my leather
Salt.
pelts or something, and I had to trade it to somebody else who had an asset that they wanted my things for, and maybe someone wanted it more easily, like flour, bread flour, for example. Most people want bread flour because most people eat bread, and they do so on a very regular basis. And so maybe I'd grab something like that because people might actually trade me for it, and it becomes an easy liquid asset, right? So that's means of exchange. But the problem was, what if someone already had a bunch of bread and they have maybe some tools that I need? Well, they don't want to trade bread or flour to me. So that wasn't a means of exchange there. And so money was kind of created to be a means of exchange, meaning I have goods and services I can trade into this common denominator, and then most people will accept it for other common denominators. It just made trading way more easy, right? And we need it in the way a society works today. We need a means of exchange, and so that's a different use of money than just a store of value. A store of value is something you want to be able to put your money in. If you put your money in flour, for example, what happens 40 years from now? Is that flour still a good store of value? Do you want to eat 40-year-old bread flour? I don't. Probably has all kinds of funk in it.
Remember, the whole Roman army was paid in salt. That's where the term salary, sal is salt.
Salt.
So salary came from that. Nowadays, you can get salt for almost nothing. Yet it was they paid armies in salt back in the day. So
Yeah.
at the time it worked. Today it doesn't. Same
That's where the
thing with
phrase "it's not worth its salt."
Yeah, weight in salt.
Yeah,
Precisely.
because you could preserve meat with salt. You could preserve a lot of things that were valuable just by packing it in salt, and you could store it over the winter. You could take it on a ship and go long term. So there's a lot of these elements that are at play, and Bitcoin is this amazing weirdo that exists in human history, where we have something that is a store of value. It can be a means of exchange, and it doesn't deteriorate over time, and it's really portable, and there's no sovereign company or government that can tell you how you can and can't use it. So yeah, just that's all I'll say on that. But our next article: Signature Bank investigated for money laundering. Oh no. Prior to demise, the pro crypto bank was reportedly under dual investigations to uncover if it was taking proactive measures to stop money laundering. Spicy time. So the cryptocurrency friendly Signature Bank was reportedly being investigated by two United States government bodies prior to its collapse. According to a March 15th Bloomberg report citing people familiar with the matter, investigators with the Justice Department were examining whether Signature took adequate measures to detect potential money laundering by its clients. It was noted that the regulator was particularly concerned as to whether the bank was taking preemptive measures to monitor transactions for signs of criminality and properly vetting account holders. A separate probe by the Securities and Exchange Commission was also taking a look at the bank, according to two anonymous sources quoted by Bloomberg. Details regarding the nature of the SEC's probes were not reported. It's unclear when the investigations began and what effect, if any, they had on the recent decision by the New York State regulators to close the bank. Its reported Signature and its staff are not accused of wrongdoing, and the investigations may be finalized without any charges or further action taken by the SEC or the Department of Justice. The report comes after March 14 class action lawsuit by Signature shareholders filed against the bank and former executives for claiming to be financially strong only 3 days before it was forcibly shuttered. Nothing to see here, everybody. We're solid and everything's okie dokie dory. Oh, actually, we have a major issue, right? That's Pax Romana, right? Like everything is good. Don't look behind. It's Wizard of Oz action, right? Don't look behind the curtain. Barney Frank, a former board member of Signature Bank, said on March 13th the regulators wanted to send a very strong anti-crypto message. Well, we have a lot of opinions for the regulators here. Frank added the crypto-friendly bank became the poster boy, as there was no insolvency based on the fundamentals. Signature was closed on March 12th, which was closed on March 12th, was part of a series of bank closures, including Silvergate Capital and Silicon Valley Bank. The Department of Justice and SEC have reportedly since initiated separate investigations into the collapse of Silvergate and Silicon Valley Bank. It's reported the regulators will examine the events leading up to the bank's collapse, including scrutinizing security filings that disclosed the sale of Silicon Valley Bank shares by the firm's CEO. Oof.
And CFO.
And CFO. Oof.
Yep.
That took place 2 weeks prior to the downfall.
So they knew it was coming.
Yeah. The SEC was not formally, or the SEC has not formally commented on the matter, but the SEC chair, Jerry Gensler, that's a joke, said March 12th that it will investigate and bring enforcement actions if we find violations on the federal securities laws. And we knew FUD was coming. We knew there was going to be something that would will the markets, and this really seems to be Moby Dick. This is the whale, I think.
And you can see so much effort to crush crypto itself. Like the fact that the CEO and the CFO were already making moves towards it, there had to be they were fully aware of the investigation. They were fully aware. By the time they decided to sell, if you're a business person, you sell the top pretty much, and you look to do so. Or if you see that something's coming, you would exit. Of course, there's laws and regulations against that because you're saving yourself. It's the captain jumping the ship when it should be the captain holding the ship until all the passengers get off safely. So it's highly suspect. I'm very interested on once the case begins, because I'm sure there'll be a case, to see the timing. Yes, and what was coming in. Like, was it anyone in the regulatory side pressuring or looking for a meltdown? I mean, what a coincidence. It was the top 3 banks in the crypto space that got murdered, and then everyone else started cascading with it. A lot of everyone else that were taken down were VCs with the FTX collapse. So anything to do with money in the last 3 months, the last quarter, has been hell for traditional fiat money and investors. So yeah, I'm quite interested to see where this is going to force. This is forcing regulation, speeding up regulation. Hopefully they're not racing in a way that will kill the industry. Instead, it should bring the brains into the industry. So it self-regulates and it works in partnership with the regulatory bodies to build it safely and not just bring in all sorts of destructive legislation that will push all this technology outside of the US. So please be careful with the decision-making regulatory bodies out there.
Yeah, and we're happy to give you our opinion because we want this to land in the right spot that's going to actually provide value to our communities. So, yeah. So, next article is actually not about banks or regulation or anything boring. It's about cool crypto tech. So, Ethereum has a new URL standard that can't be blocked. That's really cool. This is a big deal. So under a newly rolled out Ethereum standard, dApps and NFTs can be accessed by internet users without worrying about centralized censorship. Web3 URLs enabled with the launch of the new ERC 4804 have made it onto the Ethereum. Allowing internet users to access the Ethereum applications and non-fungible tokens without worrying about centralized censorship. This is a big win, actually. The new Ethereum standard, titled Web3 URL to Ethereum virtual machine call message translation, which is nerd speak for it works, was proposed on February 14th, 2022, and was co-authored by ETH storage founder Kwai Zhao.
Chisa.
Ethereum, I'm going to say Kwai.
Okay.
No, it's G. You're right. Like Goku, he's charging up his chi. Ethereum researcher Sam Wilson and Chow P or Chow Pai. You never know. I like the Chow Pai, especially on 314, which was yesterday. Woo! It described the proposal as an HTTP style URL to directly access on-chain Web3 content, such as decentralized applications or dApps. What's up, dog? Give me some dApp. Front ends and NFTs. More than a year later, ERC 4804 was approved and finalized on mainnet on March 1st. Let's go!
Amazing.
So my question here is, why aren't we using this yet? Maybe today we should all go and make URLs on this, because
You are the architect, my man.
Let's start whipping it out. So let's go. So I'm delighted to. Oh, I clicked on it. Damn it! Why? I am delighted to announce that the first web URL access protocol for ETH ERC 4804 Web3 URL is approved by EIP editors and finalized. Web3 Web3URL.io is decentralized HTTP. It allows users to directly browse the rich web content on Ethereum virtual machine, pages, image, songs, whatever. Wow. So a spokesperson for layer 2 storage protocol ETH storage explained that in many cases the ecosystem still relies on centralized web servers to access decentralized apps,
which is required. As you build, you gotta retain, what's it called, backwards compatibility, because this is a new platform. So this makes sense. They're making the strides though, so at some point we'd be able to move fully into the next fully Web3. So this is great.
And to be super clear, like, it's actually totally fine that some things are still centralized, because you don't need your entire system to be centralized. Because if you had everything centralized, you'd have really terrible, everything decentralized. Right now, with how our blockchains function, it'd be slow and crappy, and you'd have a CryptoKitties type experience for your game you're playing. Do you want to play StarCraft with CryptoKitties latency? Meaning, like, yeah, maybe later today, the one thing I clicked on will happen. No, you have how many clicks per minute, like you have to constantly be putting inputs in. And so centralized infrastructure makes sense for that. Centralized infrastructure makes sense for art assets and that type of thing. But for the data that's like your account, let's use gaming as an example, the things you own in the game. Yeah, basically the URLs, the certificates of authenticity for all the items you have in the game, that should be on a blockchain, and then the centralized infrastructure can reference that and present it to you. So we just need the store value, the system of record, to be over on blockchain. So continuing. For layer 2 storage protocol, ETH storage explained that in many cases the ecosystem still relies on centralized web servers to access decentralized apps. So obviously the next best step would be, okay, well, at least make it so people can know where these centralized servers are. If ever there's censorship, a Web3 URL can't be blocked. You can't, take it down or whatever. It's permissionless, right? So right now, all the dApps like Uniswap claim to be decentralized apps. But how do you get on the web page? You have to go through a public a public DNS, which is a domain name service. You have to go through GoDaddy. Hey, Daddy. All those centralized servers, there's tons of them. This is absolutely correct.
Yep.
We have to have a redirect. Yeah.
I see this as the kids walking for the first time. They just got to the point where they're now holding at the ledge and are attempting to walk away. So this is necessary steps before we go full, and it continues working without the centralized systems.
Yeah, my one complaint is ERC 4804. That does not rhyme. That does not have like a 404 error kind of thing. That does not have a 303 redirect. So that's my criticism for Ethereum. Like, you picked a stupid name. Shame on you. You could have made this super cool, and you made it ERC 4804.
Really? Yeah, but remember HTTP? which is in this article. It's like back in the day, HTTP. What the hell is that? You know, it's the
Well,
same.
kids these days, what are you going to do? But really, this is the Web3 infrastructure. We have Ethereum name service instead of Dr. GoDaddy. We have 4804s instead of HTTP. And, they're proposing we have Ethereum ETH storage. I don't know about ETH and ETH storage yet. I haven't really tested it out thoroughly, so I can't really give an honest opinion there. But the idea is we should have some sort of decentralized storage, like interplanetary file system or something, some place we can put files and know that those files are decentralized. We don't need to have every file in an application there, but some files should be there,
Yeah,
right? For
like the
example,
critical ones with
like an
critical
image of
information.
your like marriage certificate, that type of like level of legitimacy that probably should be in a place where it has a hash to ensure it's authentic. So today most users access internet via hypertext transfer protocol or HTTP. When an internet user clicks on a link or a type of website address, the computer uses HTTP to ask another computer to retrieve the information, such as a website or pictures of cats. Under ERC 4804, internet users have the option to type in web3 ://, which is great. That's a great prefix, as opposed to HTTP, which sounds dorky. In the browsers, to bring up dApps such as Uniswap or on-chain NFTs directly. This is because the standard allows users to directly run a query to the Ethereum virtual machine. That's why it's
Nice.
fast too. That's great architecture. So yeah, you type this URL in your browser. A little plugin in your browser allows Uniswap to be looked up, and then it talks to the Ethereum blockchain and gets the response from that Ethereum virtual machine running on Ethereum. That's how smart contracts run. And then it just returns the output of the smart contracts. So that's a really nice architecture, actually. Entire websites can theoretically be accessed by this means as long as their content is stored on the Ethereum blockchain or a compatible layer 2 protocol. Let's go. However, the cost of doing this are still prohibitive, according to the ETH storage founder, Chizao. I said it correctly this time. Jaime, are you proud?
That sounds
Uh,
amazing.
wow. The critical issue here is the storage cost of Ethereum is super, super expensive on mainnet. So expensive, you have to sell your kidneys. He didn't say that. I said that in his recent presentation in my backyard at ETH Denver. For example, 1 gigabyte of on-chain data will cost roughly $10 million. That is unacceptable for a lot of Web2 applications and even a lot of NFTs, noting that layer 2 storage solutions could help mitigate some of these costs. So they're not tone deaf. That's what's cool about this. They're not like the ETH guys at least get it that it sucks. Like
Right.
they're not like, this is actually awesome. You like it. And people are like, this is really bad.
Yeah. But like any technology, is super expensive to launch. And then you see the economies of scale bring that cost down, especially when competition comes in.
Economy of scale.
Yes.
Not an economy. Economy, Jaime. That's great. So not everything needs to go decentralized. And please hear that. That's true. Not everything needs to be decentralized. Like you don't need to decentralize the gasoline in your car. Stop doing that. Just have it in your car and drive your car. We have this app that helps you track the ERC20 token of the gasoline in your car. You're like, I don't want that. I want to go fast, shake and bake, Not everything needs to go decentralized. If you're running a pretty good Web2 business, you don't have to worry too much about centralized censorship. You can just go for that. On the other hand, if you talk about Sam Bankman-Fried and Hillary Clinton on decentralized TV, you might need a dApp and a Web3 URL. Looks both ways. On the other hand, the new standard is useful for websites that could be at risk of censorship. With Tornado Cash, thank you, as an example. So, for example, for Tornado Cash, a lot of people can't get them. How do I word this? A lot of people can't get to them through their website because that was really terrible English. If you're a dApp,
He's Asian. Come on.
it's just that did not rhyme. Your boy's got a nice flow, but that ain't it. if you're a DApp and you've already been decentralized, why are you still using a centralized website for people to get to you? That's a fair question.
Mhm.
Um, and so this is really hard to say, just like Bitcoin. What? This is really hard to say, just like how Bitcoin was founded. I think Bitcoin was not born for evil, but still, in the beginning, people were doing shady things like the Silk Road. They had been using Bitcoin. Again, terrible English, but I forgive you.
Yeah. And
I,
it's like
I
porn
get it.
in the internet and, and drugs also on the internet when it first launched. So
Yeah. I mean, who do you think was paying buku bucks for VR headsets? You know, it was dudes in the porn industry and military applications. Like, that's what it was. I'm not defending that. That's just
yeah,
a
it's
reality.
just of new technologies. It's always
Yeah.
about commerce.
Yep. So instead, he believes that, like Bitcoin, they're just giving people a decentralized option they may not have otherwise. The new Ethereum standard is the first of its kind. And so this is another example of what I've been talking about. Like, whether you like Ethereum or not, Ethereum is an R&D test bed. Ethereum, every new, I shouldn't say every new, many new things on a blockchain period come out on Ethereum because there's just a ton of R&D. There's a ton of companies behind the R&D. There's a ton of
Mhm.
people thinking about protocol level and standardization, and they're crushing it. So whether or not you like ETH, please see ETH at very least as a software developer kit for crypto in general. They
Mhm.
are leading the way in Web3, whether you like them or not. So
Yep.
credit where credit is due, game recognized game. So IPFS is an example of a network created to do through decentralized means what centralized cloud servers are currently providing. However, IPFS URLs can only link to static content. They can't be changed, and actually a really good note that IPFS is not read write, it's write, and then people
Mhm.
can read it. You can't keep changing it. It's static content. So I think that this whole Ethereum standard is, and it's going to take me a while to freaking memorize 4804.
Yeah.
That's what it is. Yeah, 4804. Uh, so ERC 4804. You know it. You heard it here. Please memorize that crap because it's cool, and
It's coming.
it's really going to change how a lot of things work for the better. So ERC 4804 will allow for dynamic data, so just allowing people to leave likes and comments, interact with content on a website. Being Ethereum native, the standard is also expected to be able to interact with other blockchains much easier. And Vitalik picks his nose Buter and said, I use IPFS to store my blog. It has serious user interface issues. It took an hour for my last update to propagate. Sticking the blog on chain would have been way easier. I clicked on something I shouldn't have again. Stop it. For blogs, that's unfortunately too expensive, but for short text records, the logic applies. So that was a really uninteresting way to say it works. Good job, Vitalik. So, what do you think about this ERC 4804? Let us know in the comments because I think this is freaking rowdy. And
It's
yeah, go ahead, Amy.
yeah, it's just what well, we did complete the bottom, right? Will allow for dynamic. Yes, we did. Uh, it's the first steps, guys, into decentralized where you own your data. And it is not censorable once this is released or deployed versus the way the internet works now. Everything's somewhere. And that's where you have Facebook with multiple data centers across the world where it replicates, but it's still under Facebook's control. So they can censor, they can. Um, if it's free, you're the product. Remember that principle. If it's not free, you have to pay for it,
Mm-hmm.
then they should not be harvesting your information and reselling it. And they usually give you that option when you're signing up to some service.
Mm-hmm.
Well, with decentralization, you own it. So if you wrote an article or you did, now you are the one who can control and be the gatekeeper of who comes in, who comes out, who can access it, who can see it, etc. So it changes the game. It takes us. That's why it's Web3 is because now you own it. You cannot and you can eat the block. So you really go for it when you go full Web3, you go for
Yeet.
the block, really.
Eat the block. Do it.
Yes,
Uh,
precisely.
Jaime had a meme he wanted to share as we exit here.
Yes, it was a joke where they documented the central banks trying to stop mass adoption and the results of it. So they were coming out of this meeting, and the dog represents everyone else that is adopting Bitcoin. And here's what you see the results of them attempting to block it. It's silent, of course, but the poor lady, he actually saw a rabbit and she got tore up, face planted and everything. So it's not funny, okay? But there you go. Just don't block Bitcoin. Don't try to control it. You'll just land flat on your
It'll
face.
pull you into the mud. Just eat the block. Full
Yeah,
send.
she
Let's
ate the
go.
block, the
Yeah.
dirt block in this case.
Dude, that happened to my wife recently. She was like hiking this dog, and this dog pulled her into the freaking like drainage ditch full of muddy water and just like wrecked her. So hashtag eat the block. I hope that doesn't happen to anyone else.
There you go. So
Until
guys,
next time,
yes, we
Jaime
love
is
seeing you.
Jaime, and the Data Lord is the Data Lord, and you are our beloved and eat the block.
Yeah,
Yeah.
and Dirty
Okay.
Shovel Gang.
We'll be back on Friday, Dirty Shovel Gang. What's up? What's
Yep.
up? Hopefully we have some cool news. Hopefully everyone's rich by then, and if not, keep calm and huddle on, huh?
That's right. Look for the next levels on Bitcoin, and Friday we'll give you the next update for the weekend.
Yeah. What are those?
Let's go. Keep building, guys.